If you follow the channel, you know that I believe PayPal is one of the best, if not the best stock to buy in the stock market at the moment. They are reporting earnings tomorrow, so let's do a preview of those earnings. Now, as we all know, sentiment is horrible around PayPal, down 77% in the past 5 years and down 40% in the past year. The current market cap is down 45% from last year, although revenue is up 4.5%, net income is up 11%, and EPS is up 18.6% compared to last year. They are now trading at a forward PE of 9, which is very cheap and why a lot of investors are interested, although we'll talk more in depth about the valuation later with the discounted cash flow model. And let's start with the expectations. Now, as you can see here, PayPal is expected to report $1.29 per share, and in terms of revenue, $8.79 billion. If we compare it to last quarter, in which they made $1.21 per share, that is around 6% growth, and the same with revenue. Last quarter they did $8.24 billion in revenue. So again, 6% growth quarter over quarter, which in my opinion is very good. Now also their last quarter was actually very solid. Year over year, they reported 7% revenue growth. They also increased guidance, and moreover, Venmo last quarter grew 20% year over year, which I believe is going to be a huge driver of revenue in the future. And the Buy Now, Pay Later segment also grew 20%. A negative aspect about the last earnings is the active accounts, which only grew 1% year over year. And although they said they were trying to focus on the most profitable customers, I will still like to see this metric growing. But earnings are only one quarter, and we always have to take a look at the broader view of the company. Now, as you can see, PayPal for the last 10 years has grown very nicely their revenue from $9 billion to $32 billion. And it is true that revenue growth percentage has started to decrease. But again, if we take a look at the quarterly revenue, last quarter was huge because this growth trend was increasing again. So we'll see in this quarter if this continues. The same goes with their profit. PayPal has also seen very consistent profit growth from $1.2 billion in net income to $4.9 currently. And one thing that I like is that they have even more free cash flow, currently sitting at $5.5 billion. And one thing that they've done very good with that extra free cash flow is buy back shares. Now, as you can see here, they've bought back a ton of shares, especially in the last couple of years when the stock has gotten cheaper and cheaper. This is huge for investors because you own more of the company and you have to share the profits with less people. This will also drive EPS massively in the future because as there are less shares outstanding, earnings per share logically will be a lot higher. By the way, where I'm showing all the data is stockanalysis.com, which is the best place for it. You have my code in the description. And in fact, if we take a look at the financial forecast, analysts are expecting PayPal to grow at around 5 to 7% in terms of revenue for the next 4 or 5 years. I mean, this is still huge and this is still very good growth for a company. Now, in terms of profit and EPS, from $5.89 per share to $9.23 per share, again, this will be driven by share buybacks also. Now, if for example, you apply a 15 PE to those 2029 earnings, it would make it a $138 stock, which means you would get 163% approximately in terms of returns in the next 4 years, which are insane returns. This is only if analysts are correct and PayPal trades at a multiple of 15 in 2029. Now, in order to determine my own returns, I use my Google Sheet. This tells me what returns I would get on my money if my assumptions occur. I did a 7-year analysis and I did low, middle, and high assumptions. And according to my low assumptions right here, you would get a 16.5% annual return on your money, middle 23%, and high 29.3%, which are huge returns. And this is obviously if you buy the stock at today's price, which is $53 per share. Now, if you want to calculate intrinsic value, I put a 10% desired annual return. Why? Because this is usually what the market gives you over long periods of time, and have intrinsic value of $74 per share according to my low, middle 102, and high 136. And actually my assumptions I believe are conservative. I have PayPal growing revenue between 4 and 7% annually for the next 7 years, averaging a profit margin and free cash flow margin between 13 and 17%, which I haven't touched on this, but if we take a look at their margins, PayPal has averaged a free cash flow margin between 14 and 25%. They also have a gross margin at around 41%, and their profit margin is very similar to their free cash flow margin. Now, if we go back to the assumptions, I also assume PayPal at the end of the 7 years sells at a PE and price to free cash flow at the end of the 7 years of 14, 16, and 18. And I also assume 2% share buyback annually, which, as we have seen, they have done a lot more share buybacks. Now, if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumption. Now, PayPal is also trading at a price to free cash flow of 8, which is its cheapest historically. Now, the same goes with their PE, although it is a bit higher at 10, but this is because they have a little bit less net income. So it looks incredibly cheap. Now, they also have a very good balance sheet as they have tons on cash. They have $10 billion in cash and $12 billion in debt. So they almost have the same level of cash than debt. Now, another thing they've been doing with their cash is paying a dividend. The current yield is 1%, which means you get 56 cents per share annually for one share, and the payout ratio is only 2.8%. This is what percentage of their profit is used to pay the dividend, so it is a very safe dividend and a very small one as well. I would prefer if they use this money to buy back more shares, but either way, it's such a small dividend that I don't take it into account. And like I've said before, active accounts seems like it's growing at a very slow pace. However, total payment volume is growing very nicely. And in conclusion, I am excited for their earnings. And like I've said before, earnings are a short-term thing, and we shouldn't make a huge deal about them unless the company says something that is going to affect the fundamentals of the business. But it doesn't matter if they miss or they beat by 10 or 20%, as long as they are in a range. Like I've shown you, you don't need PayPal to grow at double digit in order to make great returns. As long as PayPal stays in that 4 to 7% revenue growth, I believe you're going to make a lot of money on this company. Now, as far as my position, my current average is around $55 per share. So I am down about 7 or 8% on the company. And if the stock falls more on earnings due to reasons that don't affect the fundamentals of PayPal, I will buy more shares. I hope you found this video valuable. Let me know what you're expecting about PayPal stock earnings in the comments, and I'll see you in the next one.